At this point, according to the latest study, Tampa, Florida residents may need at least $85,000 to afford rent. Now, I can imagine the same is true for other places. Let's get a financial freedom discussion going. Just drop me a quick comment down below. Let me know a little bit about your housing situation in your area. It's a situation that's always been there, but it's only getting worse with the higher mortgage interest rates. Check it out.
Well, Melissa, mortgage rates have been on a tear in just the last few weeks, thanks to the debt ceiling and hotter than expected economic reads. And we just, of course, got another one in today's jobs report. Just since the middle of May, the average on the 30-year fix climbed from around 6.5% to over 7% last week. Then it dropped more than a quarter of a percentage point just in the last 3 days with the debt deal. We get today's read from Mortgage News Daily around midday, and given what's going on with the 10-year yield, which mortgage rates loosely follow, the rate will likely move back up again today.
You can't make heads or tails of this housing market, am I right? So I'm going to show you exactly what's happening, including how the Fed's rate hikes help drive up mortgage payments. Opposite to the financial freedom that we're striving for right here on the channel. This is financial enslavement of the new homeowners through these higher mortgage rates. We're not going to let them get away with this, guys. Now, I want you guys to understand the situation so that you can start building your wealth instead of making the banks and the lenders even richer at your expense. All right, so first, let's talk about rent. Zooming in on Tampa, Florida. Throughout the pandemic, Americans flocked to Florida, causing rent to soar. 319,000 Americans relocated as people wanted more relaxed C-19 rules, sunnier weather, and no state income tax. And, well, now the latest study shows that people living or wanting to move to one of the Sunshine State's fastest growing cities, they need to make at least $85,000 a year in order to afford the skyrocketing housing costs in Florida. How many of you guys are making well over $85,000 a year? Are you good? Now, according to the report, the average rent in Tampa, Florida, it's $2,118. And apparently that just ranks 18th highest among the nation's largest metropolitan areas, meaning there are cities that are way more expensive than this. So it only gets worse, basically. Now, apparently there's this movement of Americans migrating away from the blue states with steep taxes like California and New York to red states with lower taxes like Florida and Texas. Other red states saw pretty substantial population growth like Texas, North Carolina, South Carolina, Tennessee, and Georgia. Let's not forget about Arizona and Idaho. But really the headline here is how even housing, a very basic human right, has become unaffordable for a very large part of our population, namely working class Americans. Even our friends on Social Security, SSI, SSDI, these guys are about to get wiped out. I mean, am I right? Interest rate is currently at 4.75%, inflation's at 7%, and mortgage rates is well over 7.5%, but minimum wage remains the same. Not to mention, how do senior citizens retire and live off such an unstable economy? According to recent data from the United States Census Bureau, housing payments for about half of all U.S. renters are unaffordable in 2021 under guidelines set by the U.S. Department of Housing and Urban Development. Notice how that data that was mentioned was in 2021, as in like 2 years ago. Could you imagine how much bigger that number's gotten after all these exploitation/inflation and high interest rates? I'm surprised that there's even people who can still afford rent, let alone a home. So let's run a scenario using a mortgage calculator. So we'll take the median sale price of a home in the United States, which is about $400,000. Now, for first-time home buyers, they usually put down about 6%, while repeat home buyers, they put down around 13%. So let's just use 10% for this example, right? So the 30-year fixed rate mortgage interest rate has been hovering around 6 to 7% for the past few months. So let's use 6.5% for this case. Now, based on these numbers, your monthly mortgage payments would be about $2,275, excluding additional expenses like property taxes, insurance, PMI, or HOA fees. But really, the eye-popping part is when you actually look at the amortization table. So it breaks down how much of your payments go toward interest and principal. So let's just say that your loan starts in May and your first mortgage payment's due in June. So right out the gate, out of your monthly mortgage payment of $2,225, only $325 goes toward the principal, while $1,950 is just paying for interest. That money is going right into the bank's pockets. And so that means a staggering 85.7% of your payment is for interest, making the banks and the lenders richer at your expense. And it's even worse with student loans. Some people are paying $750 a month and only $32 going towards the principal. And guess what? It doesn't get much better each and every month. the interest gradually decreases by just a couple of dollars. In fact, after 10 years, you'll still be paying over $1,600 in interest every single month, with 73% of your payment going towards it. So imagine that. You'll still be paying off your loan in 10 years, and the majority of your payment will still be lining the pockets of the banks and the lenders. This is the reality, folks, and this is how they love to keep the everyday Americans slaves and trapped while they grow richer. Then, of course, there's the Fed just continuing to pump up interest rates just because they can. Mortgage rates have more than doubled ever since the Fed's first rate hike in March of 2022, and they've raised interest rates 10 times, one after another. Now, looking at the chart, the average monthly mortgage payment for a typical home, it has risen 50% over that period. Now, according to this, mortgage rates rose last year at the fastest clip in 40 years. You don't have to tell me. I feel it every day. I think it's the same with everybody that's watching right now. Would-be home buyers are just getting priced out of the market. We're already seeing mortgage demand drop and then some. It says here that this has been the fourth straight week that demand has dropped. According to the Mortgage Bankers Association economist, quote, purchase activity is constrained by reduced purchasing power from higher rates and the ongoing lack of for sale inventory in the market, while there continues to be very little rate incentive for refinance borrowers. There was less of a decline in government purchase applications last week, which was consistent with a growing share of first-time home buyers in the market, end quote. Now, this is before the next inflation data comes in over the next few days, plus the most likely Fed rate hike that will inevitably follow. What I'm saying here is more updates to come for sure. Always make sure you're subscribed and make sure your notification bell's turned on. Locking in a good mortgage rate is really a big part of getting a good deal for your home. And I don't know if you guys have noticed this, but some clever home sellers have even started advertising that they're calling an assumable sub 3% 30-year mortgage. Yeah, apparently this is a thing now. Real estate brokerage Redfin has seen a steep rise in listings that have comments like beautiful home with assumable loan at 3.25%. Facebook groups have popped up to find buyers for them. Meanwhile, new companies are pitching services to speed up the transfer. According to Redfin's chief economist, quote, homeowners with mortgages that are capable of being assumed have something valuable that many home buyers want, and they will be willing to pay for it. For people who bought when home prices were near the peak, but mortgage rates were still low, it can be a very attractive way to get out of a remorseful purchase, end quote. You know, it's pretty interesting how everything just highlights how the real estate market in our country has basically just come to a standstill because of people's regrets. Buyers are resentful that the low-cost mortgages are gone. And sellers? Well, they just don't want to budge on their prices, and they're still pretty much hoping to cash in on those peak prices during the pandemic. So yeah, instead of accepting the current reality, a determined few are trying to use imagination, creative real estate financing, and fine print to build a portal to the cheap money days of 2021. You see, most mortgages in the United States are not directly transferable to somebody else. But here's the thing, certain popular government-backed mortgages, like the ones that are insured by the Federal Housing Administration, the FHA, the Department of Veterans Affairs, and the Department of Agriculture, usually can be transferred. So these types of loans are often used by first-time home buyers and make up about a quarter of all the mortgages that are out there. So in theory, homeowners with these assumable low-rate mortgages, they have a valuable perk that they can sell along with their homes. I mean, if mortgage rates are 7% today, but you can advertise your house and say that, hey, if you buy my house, yeah, my house is like $900,000, but you can get a 3% 30-year fixed rate mortgage if you buy mine. Well, all of a sudden that house looks very, very attractive. But in reality, the actual transfer, it does take a little bit of work, mainly from the real estate agents. So from a buyer's perspective, who cares? So let's just say a homeowner wants to transfer a VA-backed mortgage, right? They lose the chance to get another similar loan unless they can find a buyer who's eligible for a VA loan and willing to take over the original mortgage. Now let's think about a homeowner who has a low rate mortgage and has paid off a significant portion of it. Well, if somebody wants to assume that loan, then they would have to come up with a big, huge down payment to cover the seller's equity. And let's be honest, very few people can actually manage to pull that off. To stimulate new loans, mortgage companies have started marketing products in which borrowers can buy down rates by paying several thousands of dollars upfront for a year or two of significantly lower interest. Now, one of the more popular products is a 2-1 buy down in which a borrower pays for an interest rate reduction of 2 percentage points during the first year and 1 percentage point in the second year. You see, they're just trying everything that they can to hook every American into a loan. Honestly, I don't think it sounds like a very good deal, but that's what they did pre-financial crisis, if you guys remember that. Because what happens after? What would happen if you stopped making mortgage payments? How long would your home remain yours? The truth is, if you have a mortgage on your primary residence, You essentially have a landlord, which is your lender. The interest that you're paying every month is kind of like rent to the institution that holds a claim on your home. And just consider the impact of higher mortgage interest rates. So if you buy a $400,000 home with a 10% down payment and a 6.5% interest rate over the course of the loan, you're going to end up paying $459,492 in interest alone. Now that's actually more interest paid than the amount of the original loan. You borrowed $360,000, but you're going to pay back a staggering $819,492. So that's why I'm calling it the opposite of financial freedom, which is financial slavery. And that's not even accounting for all the different monthly expenses like property taxes, insurance, HOA fees, and PMI. So if you factor all those in, your monthly payments could easily exceed $3,000 a month, which is just a tiny fraction going towards paying down the principal. Would you be comfortable with a $3,000 per month mortgage payment? I'm just checking. But just compare it with mortgages a few years ago when interest rates were around 3%. The difference is striking. So back then, the monthly mortgage payments were around $758 because the interest rate was lower. Now, I hope it's very, very clear for everybody. I want to make you aware that the financial trap that high mortgage interest rates creates. And it's crucial to understand that the system is designed to benefit the lenders and the banks, not the homeowners. But you don't have to accept this situation. So let's move from financial enslavement to financial freedom once again. So here are some of the strategies that I picked up. First is really shopping for the best rates on offer. Don't settle for the first mortgage offer that you receive. Take your time, shop around, and compare interest rates from different lenders and different banks. In fact, you could even show the next bank the first offer and ask them to top it. Even a slight difference in interest rates could have a significant impact on your monthly mortgage payments and your long-term savings. And don't be satisfied once you get that best rate at the moment. Don't be afraid to consider refinancing down the line. Yeah, you can sign that loan for now, but just keep an eye out for when rates start dropping, because when that recession finally does kick in, those interest rates are likely going to be dropping like a rock. By refinancing to lower interest rates down the line, you could reduce your monthly mortgage payments and save a significant amount of money over the life of the loan. While you're waiting, you can also make additional payments. Yeah, I know, it's virtually impossible when you consider how cash flow is so tight these days, but hey, I had to throw it in there. Additional loan payments will help you to build equity faster, help you to reduce your overall interest that you're going to be wasting over the years, and even small additional payments can make a big difference in the long run, sort of like paying the future you. And last but not least, don't ever forget your financial freedom fundamentals. Addressing your mortgage situation is all well and good, but don't neglect other aspects of your financial health. Focus on building an emergency fund, reducing your debts, and generating additional income streams. It all builds up to provide you with more financial stability and flexibility in the long run. Now remember guys, knowledge is power. Educate yourself about the mortgage process, interest rates, and alternative financing options. Comment section is wide open for you guys. Hit me up in the comment section down below if you got questions or you want me to make future videos for you. But for now, this was your hot housing market update, daily news report. Mortgage rates getting more unaffordable, rent getting unaffordable, basically everything becoming unaffordable, plus some tips to move from financial enslavement to financial freedom. Right now, you should see 2 videos above me. Go ahead and click on those videos right now and check those out. I just want to thank you guys so much for watching. Appreciate you guys always hitting the like button. You know how much I appreciate it. Appreciate you guys here on the channel every single day, and I'm gonna catch you on the next one.